Hey everybody, this is Danelle. Hope this finds you doing well. Today we're going to start a new series called All About Bitcoin. So please feel free to come back and check out this series because we're going to go and delve deeper into Bitcoin and what's happening in the market. As usual, we're going to go ahead and start with the cryptocurrency market update. As you can see, Bitcoin is currently trading over that $40,000 level, currently trading at $48,305, up nearly 13% over the last 7 days. Ethereum also doing quite well, nearly up 10% over the last 7 days, now over that $2,500 mark. We see that BNB is trading at $323, up nearly 8%. Solana is now over $100 again, now trading just over 11%, or I should say just under 12% over the last week. We have XRP currently trading at 52 cents. Cardano 56 cents, Avalanche back to that $40 level, up 12.65%, and Dogecoin rounding out the top 10, currently trading at 8.1 cents. So we have been talking about the spot Bitcoin ETFs and the effect that it has had on Bitcoin and why it is such a big news story in the cryptocurrency market. And one of the reasons why is because Bitcoin, as we know, and we've mentioned many times, is a finite supply. There's only going to be 21 million Bitcoin that will ever be mined according to the code that has been developed for this digital asset and decentralized cryptocurrency. And Grayscale, which is the largest institutional holder of Bitcoin, it currently has $22 billion assets under management. Now that number has actually come down since it has been converted from a Bitcoin trust to a spot Bitcoin ETFs. So just under a month ago, spot Bitcoin ETFs have now been available on the publicly traded exchanges, and Grayscale, because of the fact that they have a 1.5% expense ratio, which is nearly 7 to 8 times higher than the average of most of the other spot Bitcoin ETFs that are currently on the market. A lot of investors that were invested in the Bitcoin Trust, which was available over the counter, now that it is converted to a spot Bitcoin ETF, people are going to take advantage of the lower fees with some of these other spot Bitcoin ETFs. And then also there was a period of time, particularly most of last year, where the Bitcoin Trust was actually trading at a discount. So a spot Bitcoin ETF is where the amount of Bitcoin that is held by these issuers like Grayscale, like BlackRock, like Fidelity that have now come into the space, they have to have the correlating amount of Bitcoin that is being invested by investors into that exchange traded fund. So now it is following the Bitcoin price on the spot. So basically that's why they call it the spot Bitcoin ETF. And so now that these exchange traded funds are trading on the spot, given the Bitcoin price, they have to correlate. There's no longer that discount that Grayscale Bitcoin's trust had before the conversion. So a lot of people are taking advantage and taking profits because of that massive discount. Actually, it was nearly 50% for a period of time in 2022 and 2023. And so people have now made a lot of money due to that discount, and now that it's closed, and so they're taking advantage of that, as well as looking to get into funds, or I should say into these ETFs that have a much lower expense ratio. So we have seen a lot of outflow and a lot of volume in this GBTC Grayscale ETF, but we're also seeing a lot of demand that's coming into these other spot Bitcoin ETFs. As you can see here, ARKB, which is one of the spot Bitcoin ETFs that are trading currently on the market, and it is run by fund manager Kathy Wood, who is very popular in the investment world. They have now reached over $1 billion in assets under management and now have over 21,000 Bitcoin that they've accumulated just in approximately 20 trading days. So it's been less than a month that these spot Bitcoin ETFs have been trading on the market, and we have a ETF like ARKB that has already reached the $1 billion of assets under management mark. Now, if we go here to this article, which really does a good job of breaking down what's been going on in the ETF market. Currently, these new spot Bitcoin ETFs have now amassed over 200,000 Bitcoin in less than 1 month of trading. So this is excluding GBTC. As we showed you earlier, they have a ton of Bitcoin. They actually have over 466,000 Bitcoin in their trust. If you look at the other Bitcoins, they have now combined over 200, the other ETFs, excuse me, they are now combining for over 200,000 Bitcoin in around 20 trading days, which is absolutely incredible. And you can see on this chart here, it is going up to the right when you look at the Bitcoin that is being held by the 9 other new ETFs that are currently on the market. The biggest whale of them all currently is BlackRock's IBIT, IBIT. Their spot Bitcoin ETF now leads with over 80,000 Bitcoin, which equates to about $3.7 billion of assets. And Fidelity, which is in second place, the FBTC ticker, is currently the second highest among the new funds, and they have over 68 Bitcoin at $3.2 billion. So you can see here, when you look at the overall ETF market over the last 30 years, IBIT and FBTC is clearly by a wide margin ahead in terms of the amount of volume that has been done in the first month of trading. You can see here the chart when you compare it to some of the other larger ETFs that have come out in the past 30 years, including GLD, which is a spot gold ETF. And there are some other very popular ones. And you can also see that 2 other spot Bitcoin ETFs are also on this list, which is ARKB, which we just talked about, and BitB, which is Bitwise, and they are a crypto fund that also invests in a bunch of other different types of cryptocurrencies as well. They're a digital asset native crypto fund. So these spot Bitcoin ETFs are definitely bringing in a lot of money, and so there's obviously a lot of demand. And what makes it very interesting when it comes to the general overall landscape, particularly when it comes to Bitcoin, is that Bitcoin is a finite supply, and you're seeing all of this demand coming in, and there have been days where thousands of Bitcoin is being accumulated because of the demand that is coming into these spot Bitcoin ETFs. And there's only about 900 Bitcoin that is currently mined every day onto the market. And so we're actually outpacing the amount of Bitcoin that is being mined every day. Actually, basically nearly 10 times as much. Earlier this past week, there was a day where approximately 9,000 Bitcoin was accumulated from the spot Bitcoin ETFs. As you can see here, it takes nearly 5 to 10 years for a newborn ETF to get even close to toppling the category's liquidity. And right now, IBIT as well as FBTC is trading way more than what we're used to seeing when it comes to ETFs. And if you look at the market share, you can see that it's narrowing when it comes to the amount of volume. You can see GBTC, it was a much wider margin here at the very beginning, and now it is starting to narrow. And you can see the comparison with some of the other Bitcoin ETFs, and you're starting to see that narrowing from GBTC in terms of volume, and you're starting to see an increase when it comes to IBIT, which is this darker blue color, as well as FBTC, which is the Fidelity product. And so we're definitely starting to see that the demand continues to come into the space, even though we had a bit of a drawdown after these spot Bitcoin ETFs first came onto the market. Bitcoin price had spiked up to 49,000, then it came back down actually to under 40,000 for a period of time, and now we're back nearing that 49,000 mark. We'll see if we get upwards of 50,000 in the next couple of weeks, but a lot of people are looking forward to the Bitcoin halving, where the amount of Bitcoin that is mined per day is going to be cut in half, because the Bitcoin reward is being cut from 6.25 to 3.125 per block that is mined. So if you want to learn a little bit more about Bitcoin halving, Investopedia is a great resource for basically everything investing, but they do a really great job of breaking down the Bitcoin halving in layman's terms. So I definitely would suggest you go here if you want to learn a little bit more about Bitcoin mining and what the Bitcoin halving means. The next Bitcoin halving is supposed to happen sometime this spring, likely in April to May time frame of 2024. And when that happens, usually the Bitcoin price continues to go up because there still continues to be demand into Bitcoin, but the supply, especially the amount that is coming out onto the market, is becoming less and less. So as you can see here, approximately $900 is a 900 Bitcoin is being mined or minted into the market every day, but we're going to see that cut in half. But as I mentioned earlier, we had a day where approximately 9,000 Bitcoin were bought up by these spot Bitcoin ETFs. So that's 10x what is actually being mined per day. So with that demand, that means that the Bitcoin price has to go higher. It basically has to go higher. So this is something that a lot of people are looking at because this is an investment that has outperformed the S&P 500. It's outperformed gold. It's outperformed of some of the other major indices that is out there in the market right now. Any of the major assets that people consider as investable assets that have done well over time, and Bitcoin has way outperformed them since the beginning. Now, is there a lot of volatility? Absolutely. Do you have to have the stomach to be able to deal with the many drops that come to Bitcoin, some being as high as 80%? Yes, we've seen that. But no matter what, when you average out what Bitcoin has done since its inception, it outperforms all of the major assets out there, and it doesn't compare. So we'll definitely keep you posted on what's happening in the Bitcoin market as well as the cryptocurrency market as a whole. Please feel free to reach out to us on X or on Instagram. We post there nearly every day, but we'll keep you posted on what's going on here at YouTube weekly. We appreciate you watching, and we look forward to linking up with you here on the Networkchain. In the meantime, take care. Bye-bye.